Well, while none of us know what the future may hold, when it comes to Oklahoma's economy, our next guest has a better idea than most. Economist Mark Snead is the director of OSU's Center for Applied Economic Research and the host of this year's conference on Oklahoma's economic outlook. Mark, in our visits over the past year, you've been relatively and understandably relatively bullish, but this recent outlook into 2009, you're a little bit bearish. Where did things turn?
National conditions. You know, there's nothing that's really changed in Oklahoma. It's just that the conditions have intensified at the national level, and especially the activities of the past 90 days are things that the state economy just cannot shrug off. So we became, moderately concerned early in 2008, became extremely concerned in the third quarter of 2008.
Well, we're hearing the R word, the recession word, a whole lot. Give us some perspective. Have we been here before?
We have been through cycles just like this. They're all slightly different, but nevertheless, we've seen this run up in energy prices. We've seen the state energy sector provide us a boost, provide us some insulation from weakening economic conditions. And in this case, though, however, the national economy is declining for a variety of reasons and not just high energy prices. So we have some energy insulation. The oil and gas industry, we think, is still growing. We think it'll grow next year. But nevertheless, the severity of the conditions at the national level have reached the point that it probably will push us to small job losses next year.
But nothing approaching what we consider that time that's really changed Oklahoma, the Great Depression.
We haven't been using the Great Depression language. I mean, I think we're more talking about 74, 75, and we're talking more about 1981, 82, which were both very severe recessions. And we think at the national level that this will probably and could probably rival those. The state of Oklahoma is a different story, though. We're stronger going into this. We are still somewhat slightly insulated by energy. But nevertheless, we've been slowing for the past 3 years, and we felt all along it would take a severe recession to create job losses in Oklahoma. And it appears a severe recession is underway, and we think it will probably produce small job losses in Oklahoma next year. Whether you call that a full-blown recession in Oklahoma, it probably depends upon how it affects you personally or the industry you work in.
But despite the success that Oklahoma has experienced, there still are risks out there.
Very, very strong risks. This is, again, very similar to the oil and gas cycles we've been through. Our biggest risk factor, there are two, that the national economy continues to have lending-related problems and continues to drop down yet another notch. That would translate directly into weaker growth here. The other is oil and gas prices. It is a serious issue. There is a real concern that energy prices could continue to fall well below current levels. And if that happens, not only do we not have an energy boost, but it acts as a drag on state economic activity. And that is not necessarily a concern for 2009. We have enough momentum, I think, to prevent any rapid change in 2009, but 2010 could be a strong risk period for us, given weak energy prices. It's probably an excellent time for Oklahoma to emerge through a national crisis and come out even particularly stronger. You know, we have gone in just a little over a decade. Oklahoma's gone from just above 80% of the U.S. average per capita income to almost 95%. And we think if Oklahoma fares well through this cycle, we could be approaching 100% of the national level in income. So our suggestion is it's a great time to build human capital, to restructure personally at home. This will present some opportunities for a state like Oklahoma that's doing fairly well.